Welcome to my live market meeting, 3rd March 2021. I originally scheduled this session for 8 o'clock, 8 a.m. Eastern Standard Time. I had some issues with my computer, so I am starting it at 8:30 a.m. I apologize for the inconvenience. My name is Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel, and Twitter page. You are most welcome to make use of them. This demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk, even only you are solely responsible for the outcome of your trades. These are the systems I use for my live trading, and these are the same systems I'm going to use today. They run under these platforms, TradeStation and MetaStock. That was the last slide of my presentation. Let's continue with the live system. Starting with a study of the global market, starting with Australian Index AXJO. For the global markets, I am using the at a glance weekly daily template on Q Global running on MetaStock. Last week, when Australian index was right on the trendline support in the weekly chart, I mentioned that it was more likely price would go up from here. That came true. Price went up from the trendline support. In the daily, for the last few days, it is moving sideways. Tried to go down but recovered. Now it is moving into that sideways range. The daily has no clear direction. There is a trendline support. Even if price comes down from here until the trendline support is broken, we are not going to take any short trade. And for long trade, it has to break out of the watermark resistance to be sure of the direction. There is no Q swing trade in Australian market right now. Japanese market index topics. In the last webinar, I also mentioned that topics was at the trendline support, and it was more likely price would go up from there. That happened. It has bounced up little bit from the weekly trendline support. The direction is not clear now in the daily chart. If price comes down because of the trendline supports, we are not going to short right now. If you already took a long when price bounced from the weekly trendline support, you may continue to hold them and see if price goes up further. I will not take any new long trade in topics right now, and there is no short trade setup. Over longer term, both Australian and Japanese markets are in an uptrend. That is probably true for all the global markets. Let's look at China market. CSI 300 index. No, not this one. .CSI 300. Here the weekly went up this week, but the backdrop color is still magenta. In daily, it is moving inside the range. The direction is not clear at the right edge. If it comes down from here, we are not going to take any short trade right now. It will be too close to the lower boundary. If it goes up from here, we may not take a long trade because the weekly color is magenta. However, if price goes up from here, individual fundamentally strong stocks may give buy setup. FTSE index UK market. Price is near the trend line resistance in the weekly and also trend line resistance in daily. However, there is a trend line support also in daily. It's inside a triangle pattern in daily. Therefore, the direction is not clear. We will not take any directional trade in FTSE right now. Of the global markets that we studied so far, FTSE is the one that is moving most sideways. And India's Nifty index that used to be the strongest of the global markets, and that is continuing. Last week price came close to the trend line support, and today this week it sharply went up. Today also price went up sharply, broke above this trend line resistance. It is clearly in an uptrend and continuing to be the strongest of the global markets. For the USA market, I am going to use Q Elite running on TradeStation, starting with S&P 500 index SPY. In the weekly chart, after displaying the bearish headwinds, price came down for 1 week, and this week it is creating a bearish shape candle so far. In the daily, price is coming down with lower high and lower low. If at the right edge we have a magenta candle today or tomorrow, that may give a go with flow short trade reasonable distance away. We'll avoid taking any long trade in SPY right now. QQQ, similar picture. After displaying bearish headwind in both weekly and daily, price is coming down. This week's backdrop color is magenta, bearish. The shape is also bearish. Price has come down now. If it gives a magenta color candle today or tomorrow, that will give a bearish go with flow setup in QQQ as well. Even if it is close to the lower boundary, we'll be able to take it because this is the first time QQQ will give a go with flow short setup after an uptrend. When the first go with flow short setup comes after an uptrend, we are allowed to take it even if price is closer to the lower boundary level. Dia, after displaying bearish headwind, here also price is coming down. This week's backdrop color and shape both are bearish. However, price is close to the trend line support in both weekly and daily. If we are looking for a short setup in the market ETFs, I'll avoid using Dia right now. Russell 2000 IWM. Here also after the bearish headwind in weekly, price is coming down. This week's backdrop color and shape both are bearish, and here we already have a go with flow short setup because the daily color was magenta yesterday. So yesterday we could take a go with flow short setup at the close, putting stop just above the trend line resistance. This is the only one of the market ETFs that has already given the first go with flow short trade setup. Market is not looking so strong. Daily is looking weak, and IWM has given a short trade setup. What about the sectors? I tweeted a few days ago about, let's look at the Twitter. On 1st March, using real-time analysis of QH, that time it was 10:30 a.m. Eastern Standard Time, I saw that all the sectors were up, 98% of industries were up, and 94% of stocks were up using QH's advanced decline breadth analysis. And also notice that the percentage of stocks in the extended bucket greater than 10 jumped up from 2 to about 9. And looking at that, I commented that was it too bullish for its own good? QH will continue to show that in real time. And I followed up with some comment. After a while, same day, 1st March, 11:25 a.m., I commented, is it a sign of irrational exuberance that 100% of all sectors and 100% of industries are up? This was the real-time picture from QH. And by that time, the percentage of stocks in the extended bucket jumped up from 2 to 12. Why did I comment like that? Why was I thinking it was irrational exuberance and too bullish for its own good? Because just one day earlier, it had a distribution count of 3 in Q market breadth total view. After a bearish day, next day it went up sharply. However, a few trades that I took, thinking that price might bounce after a downturn, short downturn, all those stocks were not doing so good, even if they were fundamentally very strong. They were in strong industries, they had good technical setup, but those stocks, they were in diverse industries. They were in semiconductor, biotech, and real estate. They were RLGY in real estate, AMKR in semiconductor, and I think something ALBA or something in biotech. All of them I identified as 360 degrees trade. They were up, but they were not going above not going above early range on Q fine tune chart. However, the market breadth was very strong and there was a significant jump in the number of stocks in the extended bucket. And after the market close, I noticed that the distribution count of 3 was followed by an accumulation count of 6. That was from a bearish day, it changed to a hugely bullish day. I calculated this market breadth total view after market close using Q systems, and again I was more thinking of a pullback from there, and I took some short trades using ETFs on this very bullish accumulation day. That paid up very well next day. The very next day, that was 2nd March, 100% of sectors were down, 82% of industries were down, 73% of stocks were down, and the percentage of stocks in the extended bucket came down to about 4 from 12. So my expectation that it was irrational exuberance came true and I could profit from that. What happened to the stocks that I traded earlier. I tweeted about it on 1st March. The three stocks I discussed in the weekly roundup, weekend roundup are all up. However, none of them are so far above early range high. I may not want to turn them into a losing trade in case the market starts to reverse. It is up after the open. This I shared around 10:30 a.m. on 1st March. So I took a number of long trades, but because I was watching the market using the holistic queue systems, I could exit the trades with a small profit. Not a large profit by any means, but I didn't have to take a loss in them. The stocks were ANAB. The biotech stock was ANAB, real estate RLGY, and the semiconductor stock AMKR. I was able to exit them after I tweeted about them not going above early range high. I could exit them with a profit. As of the time I shared it, you can see from the change column, it was up from the previous day. All of them. Let's look at these three stocks first, how they turned out afterwards. RLGY. I took a long trade based on a bounce setup on this day. Very next day, it failed to go up much. It was up for the day. Anyway, using Q fine tune chart, I exited the trade on this day itself with a small profit. That was a good idea because now I can see, at least as of yesterday, it is breaking below the weekly trend line support. Bouncing from this trend line was the basis of my taking the bounce long trade. It was good decision to exit because now it is breaking below that trend line support. The biotech ANAB, I took the long trade on this day as a pullback long setup. Very next day it gapped up at the open, but it started to come down. On that day, using fine tune chart, I exited the trade with a small profit. So far it seems that was a good idea because for two successive days it has bearish shape candle. And the last was AMKR, semiconductor stock. I took a long position on this day. Why? Because after earnings it sharply went up, and though the market was coming down, it was consolidating in a sideways range, and I expected it to break out to the upside from the sideways range. After I entered, very next day it gapped up at the open, but it was not going up on fine-tuned chart, and I exited with a small profit. That was a good idea. So far, at least, it seems like it was a good idea because the daily fell sharply yesterday with a bearish headwind. Bearish flow color, bearish shape, bearish flow at pendulum high. As of yesterday, it is in fact giving a bearish headwind short trade setup, of course keeping in mind the fact that the weekly is not over yet. As of yesterday's close, if we apply the checklist conditions, daily weekly together is giving a bearish headwind short setup. Therefore, my decision to exit with a small profit on this day was a good idea. And again, I could do that. I tweeted about it before I exited. I could do that based on my holistic view of the market analysis. I could see exuberance on Q edge, on the bucket analysis, on the market breadth total view, I saw these fundamentally very strong stocks that were supposed to go up were not going up, and I exited them with a small profit. On that same day, I took some put options on the market ETFs, some verticals, some put options. All of them had very large profit by yesterday's close. I exited partial profit probably. Now another trade that I would like to discuss is a trade on oil. If I can locate the tweet on Twitter here on 26th February, and it is good to review the trades because you will see once again I could, and if you were using Q systems you could short oil on the best possible day. On 26th February during market hours, what time was it? On 26th February as of 1 p.m. I tweeted, when using the Q fine-tune charts pivot levels, gold and USO are weaker compared to the market. On daily weekly, gold was already down a lot, whereas USO was going up earlier and seems to be stalling now. Is there an opportunity to short oil? And there was, I mentioned in the previous video that I shorted with put verticals at this point. As price was continuing to go down, I added to my position with naked put options. That was based on a very short gap open. After that, price going below early low, trying to go up and starting to go down again, going below the early range low. That was the time I shorted oil first and added to my position with naked put options just a few minutes later. And I showed in the last video that at the close of the day, 26th February, it also displayed bearish headwind in the daily chart, and explained that because of the bearish headwind in the daily, I didn't exit my full position in oil at the close of this day because of the bearish headwind. One day earlier, the indecision candle came, indecision signal, and on this day, using fine-tune chart, I took a short trade in oil. The bearish headwind came at the close of the day, and I continued to hold the position, at least partial position, and that was very good decision because price has continued to move down after that. I had significant profit in the remaining positions that I was holding, and I exited some more position with profit. If we look at oil using fine-tune chart, let's use QEdit for that. See, on this day, using the bearish headwind, I could decide to hold on to the position. Now we can see weekly is also displaying bearish headwind. I took a short position on this day using fine-tune chart. As price was going below early low, it is very nicely coming down from there. I have already booked profit in the trade. I have remaining positions, but I'll make sure even if it reverses from here, I'll book profit from the trade. This was my initial entry point, and since then price is steadily going down on fine-tune chart. Here I'm using 10-minute interval. It is going down nicely with lower high and lower low. That was once again an example of using fine-tune chart and daily chart headwind signal to shorten instrument right at the very top. I think one would not short any time before that. That shows the strength of the Q system once again. Coming back to Q edge now, let's look at the useful, very useful 1 month to 1 day sector, stock, sector, industry, and stock advanced decline breadth. 1 month period is remaining bullish. It is not changing. That is true for many weeks, many months now. 10-day period is also bullish. 5-day period is still bullish. Even 2-day period is bullish. These periods, 2-day to 1 month, 1 month was always bullish, but 2-day, 5-day also turned bullish because of the strong accumulation count, 6. However, yesterday market drop that I anticipated, and yesterday's drop has made the breadth bearish for the day only, not for the longer term periods. So we are seeing some weakness yesterday, and on the market ETFs we saw that market ETFs are looking weak. IWM has given a very short trade setup. This is probably not the time to take new long trades. And if you look at technical breadth using Q Finder, the weekly picture first, overall it is still more bullish than bearish. 69% of all the technical signals on liquid stocks and S&P 1500, it is overall still more bullish. Strength signals bullish, trend continuation bullish, reversal signals are balanced. That is the weekly picture, and we saw Q edge also is bullish over the weekly period. Yesterday Q edge was bearish, and we see Q Finder is also showing bearish technical breadth. 74% of all Finder signals were bearish yesterday. 72% of strength signals bearish, 71% of trend continuation, and 79% of reversal signals are bearish. That is also showing that this is not the time to take new long trades. Now let's look at the market internals. One reason why I bought the few stocks, AMKR and then 2 more stocks few days ago, was because DIA was at trendline support and USA custom index mega cap top 20 was also at trendline support at that time. I bought it and I booked small profit the very next day. After that, market came down yesterday and mega cap top 20 also came down. It is underperforming the market. The weekly backdrop color is bearish, shape is bearish, however it has weekly trendline support. Daily also has trendline support. Unless these supports are broken, we are not going to take any short trade in mega cap top 20. And unless these supports are broken, the market may also find it difficult to come down, though the market ETFs are looking weak. So that is one thing to keep in mind. I'm doing this analysis using live systems, didn't look at it in so much detail earlier. Because of the trendline supports in weekly daily for mega cap top 20, though I said there is a bearish go with flow short setup on IWM, we may be cautious, because if mega caps hold on to their support, then the whole market may find it difficult to come down. That is one thing to keep in mind. And if we look at the market internals, let's first look at the percentage MA calculation for the major indices: Dow Jones, Nasdaq, S&P 1500, S&P 500. Stocks were 50 MA above 200 MA, still not rolling over above the average line. Only for S&P 500 it just rolled below the average line. So S&P 500 is showing weakness compared to the others. When looked at this study, percentage of stocks at 50 MA above 200 MA. Percentage of stocks above 50 MA that I explained earlier already rolled over for the second time. Now coming down with lower high, lower low. For all the 4 indices, it is coming down. percentage of stocks above 200 MA, same thing, showing weakness. So these two studies alerted us about weakness of the market before the weakness showed up on the market indices, futures or ETFs, and that helped us protect our long positions, probably take some short trades. And that was also the case when we used the other internals, new high low, advanced decline, for which I am using the weekly interval. There I showed the divergence in the peaks and the troughs were getting deeper. Though the market ETFs were going up, the divergence of bearish divergence of new high low and advanced decline for all the major indices also told us to be cautious. And as I have mentioned earlier, almost always this advanced decline and up down volume shows the weakness in the market at the top before the weakness shows up in the market futures ETFs. That was the case this time also. And lastly, the very useful market breadth total view. It had a distribution count of 3 on the daily chart 3 days ago. That was bearish. The next day it had a accumulation count of 6, which I interpreted as irrational exuberance. After that, price has come down yesterday, but there was no distribution count. If we now have a distribution count of 3 or more, 2 or more rather, and especially if we have a distribution count of 6, very high distribution count, then there is a high likelihood that the market will come down, making this 6 accumulation count a false move to the upside. But that distribution count has not come yet. We'll have to see if that comes this week. Finally, we'll take the trades using the Q trade setup checklist. Market is looking weak. Let's look for some bearish trades using Q Finder. Let's look for some breakout trades. There are 126 breakouts as of yesterday's close. 33 of them also has bearish pressure. 7 of them have bearish gap. 4 of them also have bearish flow. So let's focus on these 4 stocks. Even before opening the chart, we know that they have bearish pressure, gap down open, breaking out from trendline support, and also has a bearish flow. These stocks went down by large percentage yesterday, ranging from more than 24% to more than almost 3%. Let's look at these charts. I'm using Q Global running on Metastock for that. Let's open them using daily interval first. Store STOR broke below one trend line support. However, there is another trend line support nearby. Had a gap down open, bearish flow, bearish pressure also. This is exactly what I saw on Q Finder. However, because of another trend line support nearby, I'm not going to short it right now. Let's close it, go to the next chart. ADPT, Adaptive Biotech, gap down open, bearish flow, bearish breakout, bearish pressure. However, it has a long lower tail. Looking at that, I'm not going to short it right now. Let's close this chart also. Next one, SWCH, Switch Incorporation. large gap down open, bearish flow, bearish breakout, bearish pressure, however has a long lower tail. I'm not going to short it. As of yesterday's close, it had a large gap down open. If it continues to go down from here using fine-tune chart, I would not mind shorting it, but I wouldn't short it as of yesterday's close. Close it. FGEN, Fibrogen, huge gap down open, bearish breakout, bearish flow, bearish pressure. However, this also has a long lower tail, so I'm not going to short it. So the 4 stocks that I saw so far, they are bearish, but they had long lower tails, so I was not going to short it. Let's remove these stocks. Let's look at the next 3 stocks. They are having bearish pressure, gap down open and breakout. Let's look at them. STRA, breakout from trendline support, bearish shape candle, bearish pressure. This is looking very weak. Stock in a downtrend, consolidating for a very long time in a sideways move and then dropping below the sideways range again. If the same pattern happened to the upside, then we would happily take a long position as a breakout from consolidation in a stock that was in an uptrend. If we apply the same concept, then we would not mind shorting STRA. But we'll look at it using weekly, daily and also check its fundamentals. I'll come back to that. Let's look at the next stock. CWK broke out from trendline support. However, the candle shape is mixed. Gap down at open but closed higher. Indecisive shape candle and the yellow, not yellow, white direction line is just below price. So I'm not going to short it right now. Also has watermark support nearby. It is not in downtrend yet if we see longer term period, not like the previous stock. So I'm not going to short it. Let's close it. Next stock SWTX Spring Works. Bearish breakout, bearish pressure, breakout from trendline support. However, there is another trendline support. Price jumped up precisely from there, closed with an indecisive shape candle. So I'm not going to short it. Close it. So I'm left with STRL. Let's look at that stock using weekly, daily. Weekly also broke below this range that had a bullish headwind at the bottom. That is causing some concern. It is likely that price will go up after this down move yesterday, creating a false downside breakout. STRA, I think it is an educational industry stock. Let's check its fundamentals. Yes, education services industry. Let's check the industry strength or weakness. Industry is very weak. One glance at QH score shows that. So we are allowed to short in the industry. fundamentally this stock has good valuation but earnings growth is negative. That allows us to short. 71% of stocks in the industry came down. Peer stocks in the industry came down yesterday. So when we apply the 360 degrees technique, this one is allowing us to short but not at the close of the market yesterday. I wouldn't do that only because there was a bullish headwind around that closing price earlier in the weekly chart. Instead, let's look at the fine-tune chart. I will use Q Elite for that. You could use Q Global also. Q Elite also had the bullish headwind earlier. Now we can see that was associated with earnings. After earnings, price consolidated for a very long time. Didn't go down, didn't go up, and now it is breaking. Now we have this additional insight from the earnings week. The fact that now it is breaking below that earnings week, then I may be again willing to take a short trade in this trade. Let's say if I used fine-tune chart, could I take a short trade early, just like I did in US oil? Yesterday price opened, I think, with a very small gap down open. Let's check that out from Sonar. STRA. Yes, there was a very small gap down open yesterday of minus 0.1%. After the gap down open, it moved down by another 7.7%. Bearish pressure. Now back to the fine-tune chart. It had a very small gap down open. Then it went below the early range low. Let's change to 5-minute interval. You could take a short trade at the close of this candle. When it decisively, not there, decisively closed below early range low, the weekly daily was looking weak, industry was weak, fundamentals allowed us to short. Initial stop would be just above early range high. By the time price came to this pause line, the risk distance was covered. You could book at least partial profit. At the end of the day, the chart closed looking bearish, so you would continue to hold partial position, similar to how I took the oil trade. I could short it at the very top in case of oil, and in this case we could short it using the concept of breaking down below consolidation range in a stock that was already in a downtrend. Once again, using 360 degrees analysis and fine-tune chart, you could take a precise short entry. Interestingly, when we carried out the analysis of the other breakout trades, we saw that several of the breakout trades had long lower tail. That is again giving some concern when we have a bearish day and then I look for stocks with multiple bearish signals, pressure, gap, breakout, go with flow, try to combine them and then see several of them have long lower tail. That is a concern. Let's look at some other trade ideas. Let me delete them. Instead of breakout, let me look at trend following short trades, and I may try to combine that with pullback. So I have these 21 stocks with go with flow as well as pullback setup. Let's look at the ones that went down by, let's say, 4% and more yesterday. No, let me do one more thing. I see some of the stocks are at price extreme low. I'm going to deselect them. So now I am left with only the stocks that are not at price extreme low already, and they are giving pullback as well as going through short trade setup. Let's look at them. Now I should have closed the existing charts first. Let me do again so that I know these are the new charts I am opening. I am looking for stocks with bearish flow and possible pullback setup. Pullback setup meaning that it is below both white and yellow direction lines. It went below, tried to recover and going down again. This is ADVM, Adverum Biotech, I think. It has all the individual signals, however, moving sideways, and there are many trend line supports, so I'm not going to short it. SIOX, again at trend line support, not going to short it. PRDO at trend line support, not going to short it. NEOS at trend line support, not going to short it. LRN also has trend line support and close to the lower boundary, not going to short it. ADAP close right below trend line support or at trend line support, not going to short it. WISA already came down from the recent swing high. Stop would be too far above probably, not looking so good for my liking, so I am not going to short it. Interestingly, when I looked at the breakout setups and also quick flow pullback setups, I didn't find interesting short trades that I would like to take, so that is tempering my willingness to short stocks. Let's see if I have a symbol list for liquid options. Let's using Q Sonar on Elite. This is a different list, stocks with liquid options. From Q Finder, I was looking at stocks that were liquid stocks and S&P 1500 stocks. There were many low price stocks also there. Let's see if I use only these stocks with liquid options, much shorter list, can we find trade ideas. It is calculating and filling up the cells. I'm keeping an eye on these columns, especially the ones with capital letter, breakout, bounce, headwind, box, and now pullback also. So far, there is no bearish setup that has shown up. There are some trend line touches here and here, but none of the trade setups have shown up so far. Okay, one bearish headwind. Let's look at that. Devon Energy, DVN, had a bearish headwind in the daily chart. The indecisive indication also. Another bearish headwind sometime earlier. The daily is showing weakness, however, weekly is not meeting the checklist conditions for bearish headwind long trade setup. There is indecision candle in weekly, but the headwind setup requires a yellow candle in weekly or a bearish shape candle in weekly, none of those are true. That's why we don't have a bearish headwind short trade setup. Looking at the headwind and indecision signal in daily, indecision signal in weekly, if I was holding a long position, I could tighten stop, but I'm not going to short it. We have unambiguous checklist. Unless the checklist conditions are meeting, I'm not going to short it. Okay, let's go back to the top. Let's look for breakout. There is no bearish breakout. Bounce, no. Headwind. Okay, there is also Citibank, GE and LB. Let's look at them. The headwind signal, they give lucrative shorting opportunities at the top, and at minimum they will help us protect profit. Citibank, bearish headwind in daily right at the watermark resistance above upper boundary. Also displayed a bear release signal yesterday, bearish shape. Weekly has indecision indication at watermark resistance. The weekly color is not yellow, shape is not bearish, shape is indecisive. So it is not meeting checklist conditions for headwind short setup. It's also not meeting the checklist conditions for box short setup, because box short setup at watermark resistance double top in this case requires a yellow candle in weekly. However, it is looking weak overall. This has no Q trade setup, but I would not mind taking a short position if price goes down today using fine tune chart. In the overnight market, it is up 0.9%. That's better on fine tune. If it opens higher and starts to go down, that may give a low risk shorting opportunity. See Citibank, no short trade setup using weekly daily, but using fine tune chart, we may not mind taking a short provided fundamental and industry both are showing some weakness. Let's check that out. See for Citibank. Diversified banks, let's check its industry. Financials were strong lately. Let's see if it weakened yesterday. It is not the strongest, not the weakest. The pace columns are showing some deceleration that allows us to short. Let's check the fundamentals. Remember, US oil I could short at the very top using headwind signal. The advantage of headwind setup, like the other reversal setups in Q systems like box as well as bounce, they are extremely narrow risk trades. Overall, they work out pretty well. This stock valuation is strong. However, earnings growth is negative for the 3 quarters and 3 years. That allows us to short. Yesterday, 80% of peer stocks came down. So Citibank may give a short setup using fine-tuned chart today. Let's look at the others. GE. Very similar picture, isn't it? Bearish headwind, bear release in daily, and it is at watermark resistance in weekly. Therefore, watermark resistance is there in daily also. At that level, there was an indecisive shape candle earlier in weekly and a bearish headwind also. Weekly shape is bearish. Again, in overnight market, it is up 0.9%. Very similar to Citibank. I wouldn't mind shorting GE using fine-tuned chart, especially if the market also starts to come down after open. However, if I compare Citibank and GE, Citibank is looking more attractive for shorting. Citibank didn't have this trend line support. Though this trend line support is far away, especially if we consider that we are shorting using fine-tuned chart. Let me add those to my watch list. Citibank, GE. Citibank also had a trend line support in daily but far away. GE also has reasonable distance away. We are 5 minutes before market open. Let's look at, maybe let's check LB. LB was going up, L brands, and I can see from the right side that these are all at pendulum high. That is a good point to short. I can see Play and Sono. They had false move yesterday, and Play had a reversal candle also. So why don't I look at that? Play, PLAY, bearish headwind, bearish shape candle. However, trend line support here is too close. Let's ignore that. Let's look at this stock, on mobile. I think it has bearish U-turn, bearish pressure. Came down by 4.4% yesterday. Bearish headwind, bearish traffic light, bearish pressure, U-turn. Weekly is also bearish in color and shape. This is giving a bearish headwind short trade setup. However, there is a trend line support nearby, not the perfect setup. If the headwind came when price was above the upper boundary, those give lower risk headwind short setup. Now it is already some distance away from the upper boundary and there is a trend line support. It may come down by only one day before starting to go up again. So this is not looking so attractive. I'll not look at more stocks. So interestingly, when I looked at Q Finder, because I ran Q Finder that included low price stocks also. What I see that though IWM is actually giving a go with flow short setup as of yesterday's close, Finder which includes low price stocks, the stocks that are very bearish on Q Finder daily signals, many of them have trendline support and or have long lower tail. Those are probably more lower price stocks. So though I thought I could short IWM yesterday, at end of day when I do this complete analysis, I am more cautious. Also, the mega caps are near trendline support. That is another reason to be cautious. On the other hand, when I use a different list, very liquid options, those are not low price stocks necessarily. Most of them are not low price stocks, not below $10. There I find several shorting opportunities. Some of them are short the top headwind setup. So we may or I may look for some shorting opportunity from them, especially if the market pulls down after the open. Just about to have market open. Let's end today's session here. I look forward to seeing you in our next session during the weekend. I'll announce the date and time on Twitter and you will come to know from YouTube also if you're subscribing to my channel. Thanks a lot again for joining. Apologize for delayed start today. Have a great week and trade profitably. Thank you.